All right, everybody, in today's video, I am excited to show you the one Doji candle setup that I used today, and it's very rare, so this setup does not happen often, but when it does, it's an absolute moneymaker, and here is the proof. If you'll notice the top of this evaluation right here, passed in one day, made just over $20,000 to pass the eval. And that is because when the right setups come along, you can capitalize on this Doji candle setup to ride the trend and to pass your evals, make a healthy profit, and have clear defined stops and take profits. So let's go through the chart on a macro level first. I took this trade in the afternoon session as this was when the setup presented itself. Now, mind you, we have a clear uptrend today. We had a lot of liquidity, a lot of buyer imbalances, so I am expecting the market to retrace like we see right here, but it looks like we have clear acceptance above 20,000, meaning we're likely to move higher, but we have to retest some of these lows and balance the upper end of the 19s. So let's get right into the Doji candle setup that I look for, and I want to use the 1 minute chart for this. And as you will notice right here at 219, you see we have a clear uptrend. Sellers are starting to come in. So here's where I'm starting to watch these levels. And now, mind you, if you look to the left, because we always have to look left, what do you see? We have clear resistance right here before we had to move down. Low area of consolidation with lower resistance right in this area. But this is the area that I wanted to focus on for this move. So buyers raided all of these stops that were sitting right here. Sellers pushed it back down, but the buyers forced their way back up. Okay, so what are we looking for here? How can we add another area of confluence to see that the trend might be becoming exhausted? I like to use the MACD. Let's bring the MACD back up, overlay it on the chart. Okay. As we look, this was where my entry was. I just want to mark this out. This Doji candle right in the middle. What do you notice on the MACD? We're starting to see that there's quite a gap between the signal line and the price line. We're moving up, we're moving up. Now the volume bars show that we have volume dipping down. So volume here, strong push up, rated the stops, no surprise. Lower volume, sellers pushed back down. Buyers came back up on equal volume. Interesting. 1, 2, 3, 4 candles of equal volume, but the price is not moving that much higher, showing that buyers are getting exhausted and sellers are about to step back in. Right here, you have the signal line at its peak, the price line at its peak, and it starts to curl over. But the dagger comes with the decreased volume on this candle right here. So I get in on this candle and I mark my stop right above this green candle. So I'm in somewhere on this and I ride this all the way down to clear 20K to pass the eval. Okay, so how do we do that? How do we keep in the position to make sure that we're going to take those profits? Well, we notice that as each red candle comes in, the buyer demand on these candles on the volume here is going down. And then as we start to get past this level right here, you'll notice that the selling pressure really steps in. Buyers tried to have a fight, but I stayed in because look, 1, 2, 3 pushes down, and it was on this candle where we retested this quote unquote supply zone or demand zone where I got out of the position to clear that 20K, and then we pushed back up and chopped. So in a nutshell, that is the exact strategy that I used. You would see the Doji candle. So let's recap this. You would see the Doji candle, which is the indecision in the market where the sellers are going to push this thing back down. You would enter on one of these two candles and have a clear defined stop above that Doji candle. And then you can have your take profit somewhere down in here where buyers started to balance previously. Or you can go a little bit deeper. We have an imbalance down here, which was rated by these sellers, and then the market pushed it back up. So that is what I use. I add another layer of confluence with the MACD. I know some people have their own, pros and cons of using the MACD. I like to use it, but with full size, with proper risk management, your sizing does not matter. Let me say that one more time. You can get in full size. I got in 35 contracts here. You can get in full size and ride this down when you know that the MACD crosses over and then the seller volume pushes up, knowing that your stop is right here, right above this Doji candle. That's okay. You can have confidence in your risk management and in your strategy to know you can have a nice take profit on this. The same would apply for the inverse. If this chart was flipped and this was on the buy side, where sellers were trying to push this down and then you had the doji candle here before it ripped itself back up, same concept applies. Stop would be below that doji candle where the sellers pushed, and then you would just ride the trend up into some seller imbalances. When the next time I take this trade on the buy side, I'll record that and let you know, but this is my favorite sell indicator with confluence on the MACD to show how you can ride this trade through the trend. So guys, any questions, please comment down below. More than happy to answer them. Again, do know this exact trade does not come about often, but when it does, it pays handsomely. So hope to see you guys in the next video. Subscribe, help me get to 1,000, and I'll see you in the next video.